All right, morning everyone. Really sorry about the late start here. We had a slight of numbers that kind of have come through here pre-market, and also had some terminal issues. All right, so let's get going. Friday session in U.S. markets, we did see a bit of a late day rally, but I think markets didn't really care what happened toward the end there. After the previous day's shift, the spike in volatility and the risk aversion that we saw on Thursday, I think people were kind of looking at Friday to be a freebie, even if we had an up day. So it's nothing of consequence, I don't think. The bounce is kind of significantly less than what the sell-off was. So either way, we had a couple little things on the day. We had home construction numbers of April, which grew a little bit better than expected, maybe taking some of the fears away from some of the housing worries at the moment. And then we had some things like Verizon and Nordstrom, JCPenney that outperformed on the day. But, other than that, there was very little leadership there. And, we kind of just got a bit of a drift up on the day with on light volumes. When you look at the Asian session, we had quite reasonable sell-offs, specifically in Aussie. We haven't seen Australia sell off like that in quite some time. Shanghai also came down over 1%, and the other markets really started to pull back a little bit toward the end of the day as well. We did have Chinese shares that were basically selling off continued economic worries, and we had some of the property developers that were leading the retreat there. We also saw the miners kind of follow on the back of the local and European indexes from Friday. We saw the miners there, and Australia really lead us down there. But same sort of thing, not a whole lot to report out of Asia, just kind of following on the back of that sell-off in the mining space on Friday. All right, little chart here from Jay Lyons Fund Management, showing the percentage of household assets in stocks. It's much greater than the 70-year mean. So you can see here that people have really kind of shifted back into stocks quite aggressively over the last, specifically 1 to 2 years. The only period that it's actually been higher than this was in the 99-2000 era, and that's extremely telling. So that, when you even really dig down, you get away from the PE ratios and the dividend ratios and the NAVs and all that kind of stuff of individual stock measurements. This is probably the third or fourth one that we've looked at, starting to show us that that there are other metrics that are showing us that the stock market is at a higher end of the valuation curve, and it doesn't necessarily mean that we're going to get a correction now. It could come in a year's time. It could come longer than that. But we are kind of up there, and I think we must act accordingly and be a little bit more careful buying too aggressively on the pullbacks because of it. All right. Let's look at next chart here. This is a really interesting chart. I saw an article about this on the weekend, and I was actually just talking about it about 2 or 3 weeks ago. The yields on these things have gone to nothing. We dropped below 6% on this is the Greek 10-year yield, and we saw Greek 10 years that dropped below 6% in terms of on the yields. And you see here on the last week and a half, you've seen actually quite a dramatic spike. We've moved from below 6 almost up to 7%, and it's not just Greece. We've seen a couple of the other ones start to spike up as well. Greece specifically has some political issues that are really starting to rear their head again. It looks like the left leaning parties are really starting to gain major traction there, and people are getting very worried about what's going to happen. So this it's the kind of thing that no one, there's no worries, and all of a sudden, until there are worries, we've kind of gotten as the market sold off for a couple days, and all of a sudden, people start finding things to worry about, and Europe might come back into play. So let's just watch that over the next couple weeks. We'll continue to watch the European yields, and if they continue to rise, then that can be a big could be a big problem coming for markets again, if that becomes another issue. All right. On the corporate action today, we've got tons of stuff. We have AngloGold that just came out a little while ago. AngloGold looked like a good beat on some of the metrics that I was looking at a second ago on the Bloomberg terminal here. I think they only actually came in at 29 cents in earnings per share, if I'm not mistaken. But the revenue number was better. The cash costs were lower. So I'm not sure if there's a once-off there in earnings per share, and I could be wrong because I'm not actually looking at that number, but I thought it said 29 cents. So don't shoot me for that one. But I thought it was a relatively decent number out of AngloGold, especially when you looked at the cash cost numbers that came in about $30-$40 per ounce lower than expectations, and the revenue numbers were pretty good. If you look at Vodacom this morning, they had a big miss on headline earnings per share. Revenue came in more or less in line, but a big miss on headline earnings per share. The thing is, they also came out with an announcement of the acquisition of Neotel this morning for $7 billion. I'm not 100% on that $7 billion number. I think we have to get back to you on what the gauge was for what the right price for the acquisition was. I seem to remember that $7 billion, some of the analysts were calling for a steal. I think maybe we can send out a bit of a tweet in a little bit and just kind of what some of the analysts had expected, but that's going to be a big stock that's going to be in play today. A lot going on there between earnings and the acquisition of Neotel. Okay, we've got Barloworld. Anybody seen Abel out? Yeah. We got Barloworld. That came out this morning with a miss on the expectation of 3 Rand 79. Came in at 336. Revenue came in at 29.89 versus expectation of 35.87. Remember, they've given us a trading statement and they've guided lower. They had guided lower already, so we were expecting them to miss off of the Bloomberg consensus. But this is definitely kind of reiterating, obviously, the miss that we saw in that trading statement. We also had Netcare out this morning. Headline earnings per share, 71 cents. Expectations for 73. Revenues also a bit of a miss. So all in all, looking across the board here on the local side, I mean, outside of AngloGold, we really saw a kind of a weak slate of earnings. I haven't actually seen the African Bank numbers. I'm not sure if they're actually out yet. They are. Sorry guys. So I haven't had a chance to go through these, but obviously we're expecting weak numbers out of African Bank, looking for a loss of 2 Rand 41 per share. So just have a look at those and okay, it sounds like they came in more or less in line on the day. All right, looking at market data out today, we have we had some numbers out of Japan earlier, but very little I think to really influence the market there. We've got Spanish trade balance, we've got construction output in the Eurozone, and then we've got the FOMC minutes, FOMC member Fisher speaking later in the States. So there's absolutely nothing that's going to be driving markets unless Fisher comes out with a bit of a bombshell later this afternoon, and we're going to be kind of going on trade action. We're starting to weaken into the session this morning with the FTSE future pulling back about 15 points in the last 15 minutes or so, and our futures obviously coming in a little bit weak. We have some earnings misses on the local market this morning, and we finally saw a little bit of weakness at the end of the week session last week here locally. So we'll get into the maps here. We'll start to look for some idea generation. One of the first things that I think is kind of going to be important is the ALSI. If you look here, we're going to look at this level, which is really where we broke out above, and then you can see how many touches we had when we were consolidating right above that. That's 44,000 level. To me, this level is very clear cut. You can see there 1, 2, 3, 4, 5 touches and failures. Then when we broke out, we touched it 1, 2, 3, 4, 5 times as well, testing it on the on the pullbacks and survived it every single time on a closing basis. And you can see there how we obviously started to push up off that level. We're coming back now down, and we're only at the moment 200 points above that level. I kind of would expect us to test it either today or tomorrow. And we've got a couple things here. Obviously, if that level drops, we'll probably be looking for us to come into some sort of trend support, which is probably down, somewhat significantly south of this, maybe closer to the 50-day moving average. Depending on if you actually want to try to draw the chart like that, you could draw it a hell of a lot flatter here and draw it to the wicks. But either way, definitely a reasonable sell-off to come if we drop the 44,000 level. And I think that's the level we got to watch today, guys. We can drop that. We can definitely get some acceleration of the sell-off. All right, we're going to look at Anglos again. I know we showed this chart a lot over the past 4 or 5 days, but it's become more and more important here for different reasons. You can see here we really basically made a double top here, either way you look at it. Let's take these little high points of the wicks out. Either way, we're looking very double topish now after we had this wicked sell-off off the top. We traded at 294. 3 trading sessions ago, we were south of 270 yesterday. We closed just above it, and really you can see there we've totally dropped what's been recent support and the recent uptrend. I think there's no reason why this thing can't really continue to pull back. That's a major failure. We had really a false breakout here and then a total reversal, and you often get some of your biggest the quickest moves out of those kind of failures. Kind of getting guys on the wrong side playing the breakout. Okay, Sasol also starting to look very double topish here in Sasol. And same thing, we've shown this chart several times, but it's taken time for it to really develop and give us a clear indication. What we're going to look at here is we popped up here and we made a short-term little double top going back in March. We broke up above that, and then we kind of petered around on either side of that level. And that level is at about, call it 580, somewhere between 585 and 587. And that level is crucial now because I think we've dropped that. We've also dropped this the trend line that we've had that's run all the way back to December. And like I said, this thing also looking a little bit double topish. I was kind of expecting this thing in the near term to potentially come all the way back and test what really was the first major level of support now, right at 560 Rand. So that's kind of what my thought pattern is around that one. We'll have to watch and see how that plays out, but definitely those two charts looking quite double topish. We're going to look at BTI here, British American Tobacco, which announced a big share buyback last week. $600 where we got this breakout. We kind of made a little bit of a mini head and shoulder, I guess, above that breakout, and then we just ripped above the shoulder line on Friday. You can call it a little descending triangle here. Anyway, we've made that breakout. You can see there it's incredibly well defined, so there's no ifs, ands, or buts of where the levels are here on the charts. This thing looks like it's definitely going to take out all-time highs, in the next few sessions, which are at 620. So probably some reasonable room to run here, and obviously a defensive, so maybe one of the more safe ones to play on the long side if you're expecting a pullback. All right, Tiger Brands. We'll look at this on a 2-year. This thing had a trading statement the other day, came out a little bit better than expected, and you can really see here at 295 is where trend line resistance kind of comes in. We wicked up and touched that the other day on the day of when they had results, and it made kind of a real pullback into support. It was resistance and became support, and then and managed to kind of hold it on a closing basis on that day. You can see they're closed just above, and then yesterday or Friday session we rallied up closer to this 295 level. This is important, because the target here on the breakout that we got from this little from this 285 level takes us significantly higher. It's actually going to probably take us to well over 300, probably about 305, 307. So if we get through this through 295, I think that we can move the same height of this channel to the upside on this breakout that happened at 286 or 285, and it'll take us about somewhere between 305 to 307 if we can get above 295 in Tiger Brands. And then the last one I'm going to show is Coronation. Coronation's been on an unbelievable tear. I actually think that that they could end up getting some bad publicity out of this whole Able story if Able continues to dive, if share price continues to dive. They're the biggest shareholder. It'll look really bad for them because they've made such a big bet in it, owning 20%. Right now, it's kind of right at support. So the chart still looks very bullish here, definitely flagging right into support at about, call it 102 Rand. But if we drop here, we've kind of got trend line support, which comes in at right at maybe 100, 101. And if we drop 100, I think that this thing could definitely come back and test the real breakout that happened when we broke out to new highs at 85. You can see all the consolidation we put in right on top of 85, probably 10 trading days in a row or 12 trading days in a row, where we touched 85 before we could finally actually push off of it. Like I said, so if we drop triple digits in Coronation, I don't see any reason why we can't come back and test 85 rather quickly in CMLs. That's it for today, guys. Thanks a lot.